What's up, everyone? Let me give you some reason why you shouldn't pay off your house early, and it's not for everyone. Well, here's the thing. I personally believe paying off your house early is a good thing, and everyone should do it.
And you're reducing the amount of interest you'll have to pay. Owning your home and not having to worry about making the mortgage payments can generate a tremendous peace over your family. Once you own a home, you won't have to stress out about the bank seizing the property if you lose your job or your business goes under or you can't keep up with the mortgage payments because you've already paid off the mortgage. This peace of mind can be priceless for many people.
And that's just my personal belief. I'm not a financial expert. But with me saying this, there are some reasons why you shouldn't pay off your house early.
Here's why you should never pay off your house. Here's your house. It's worth $100,000. That's what this stack is worth. And you've been told by Dave Ramsey and other people, I got to get my house paid off because I'm going to be financially free. False. Most people will accelerate getting their house paid off by throwing extra money on their 30-year mortgage. And maybe after 20 years, you do it. You finally wipe it out. You own your house free and clear. I got news for you. What do you have for retirement?
And they are very valid reasons.
Are there pros and cons when paying off your mortgage early?
There are pros and cons to paying off your mortgage early. I think it just depends on the situation of the buyer. I hate to use the word.
Now, a lot of people are going to say, hey, some of these reasons aren't valid or some of these reasons are valid. But at the end of the day, it's up to you if you want to pay off your house early. And yes, you can miss out on some great deals. But at the end of the day, it's a major peace of mind. I personally like the idea of paying off your house early because there's nothing like walking on your own grass, knowing that you own it free and clear. Maybe you still have to pay taxes, or yeah, you do have to pay taxes, but you still own the property and you're not paying interest on it. And that's my personal opinion. Now, let's go into the reason why you shouldn't pay off your house. Remember, I still believe you should pay off your house early, but here is reason number one. You could lose valuable tax deduction.
I just put 20% down on a $3 million house. Pretty sweet, right? Why don't you pay it off? You have much more than that in your bank account. Yeah, but then I wouldn't be able to take a tax deduction on the interest payments. You mean a write-off, right? Let's say I make $100K per year and I deduct $25K of interest payments. I'd be taxed on an income of $75K instead of $100.
Number one, under the current tax code, a married couple has a $24,000 standard deduction. If you don't have write-offs in excess of that, you would take that. Almost no one actually takes the tax deduction on their house.
Homeowners who itemize can deduct mortgage interest from their taxable income. While in 2017, the Tax Cut and Job Act capped that for many, it still applies in many cases. Reducing your mortgage means reducing your deduction, and it could bump you into a higher tax bracket, so you could be paying higher taxes that following year you pay off your mortgage. So, yes, you can be paying more taxes, and that's one of the things people don't talk about. But at the end of the day, it's based off your situation. Number two, you might miss out on higher investment return. So, some people have interest rate or mortgage rate at a 2% and 3% still. And if you invest in the market, you can get a 12% return every year. So, yes, you can miss out. With counter inflation, it could be about 7% annual return. So yes, you can lose out on massive returns if you pay off your house early. So instead of paying off your house early, you can invest in a 401k, IRA, or even in an index and get a better return than paying off your house. But that at the end of the day, it counts on what you got your mortgage rate for. So some people got a mortgage rate at 7%, 9%, 8%. So they're at a higher interest rate. But there are some people with very low interest rate and you can get a better return. And then here's the other problem, number three. Once you pay off your house, it's really hard with liquidation. Now, yes, you can go back and get a loan on your house or mortgage and get the liquid cash. But at the end of the day, once your money is in your house and in the process, it is not easy to pull it back out unless you take a second mortgage or if you finish paying off your house, you have another mortgage on your house, and that's still the same situation. So Yes, if you invest all your extra cash or extra cash you got given those years to pay off your house earlier, it could put you in an issue with liquidation or cash on hand. And this is why I tell you only put the extra, but some people go crazy and they put a lot more. All right. So here's the other thing that people do. They pay off their house and they put them far behind on retirement saving. And the thing about retirement saving is, on average, an American under 40 has $49,000 saved for retirement, and that's according to Smart Asset Reporting. So people are pouring money into the mortgage and neglecting their retirement, and that is not a good thing. Now, if I'm saying if you had to pick one or the other, make sure you put money into retirement and get the match, and then you can put whatever you want on your house. But the big part is only put extra money to pay down your house. Don't put your emergency fund. Don't put your retirement account saving in there. There's a time and a place for everything, and do not just dump everything in your house just to pay it off early. It makes no sense. Now, another issue you might have is you need to check your mortgage, because early payoff can trigger prepayment penalty. Some lender has charges. If you pay off your mortgage early, you're going to have to pay us a penalty fee.
Buyers always ask me if there's a prepayment penalty with my loan, and this is what I tell them. You have your DSCR loans, your non-QM, your bank statement loans, all those different loans that are not traditional could potentially have prepayment penalties associated with it. Any loan that's your traditional, conventional, FHA, VA, jumbo loan, none of those loans are going to have what you call a prepayment penalty. So you could pay off that loan as fast as possible.
And there's the issue. Now you paid off your house early, but now you have a $20,000 penalty fee. And it's a good possibility you have one if you didn't read your contract and you fell for it. So make sure you check your mortgage, because you could have a pretty deep penalty fee in there. But majority of the time, I haven't seen anyone with the penalty fee, but there are few and far in between that there is some with it. So be careful. You might have one. Now, another issue I see that people do is you could be ignoring your high interest debt or other debts you have just to pay off your house. Do not ignore all your other debts. This is one of the things I've seen people do. You need to either pay your credit card off first or your other debts first before you tackle your house or your mortgage. And do not get it mixed up. Personally, your house should be the last thing you pay off, but it's up to you. Talk to a financial advisor. And here's another thing that you might not know is if you rely on your credit. If you pay off your house early, you can hurt your mixed credit. So you don't have a mortgage no more, you might lose some of your credit points. And yes, if you have your house paid off, you might not have to worry about it anymore. But at the end of the day, it could drop your credit because you no longer have that mixed credit, and they're going to use it against you. They shouldn't, but at the end of the day, the creditor's going to do what they want to about your credit score. And lastly, you paying off your house early might delay big life goals. And at the end of the day, you shouldn't be waiting to have kids until your mortgage is paid off. And some people wait to launch their business until their mortgage is paid off. Your mortgage should just be being paid off, so it shouldn't be a big factor for you to start your business, to have kids. But at the end of the day, talk to a financial expert. Make sure you make the right choice for you. And like and subscribe to my video, and that's all I got. And comment down below, what do you think? At the end of the day, I believe paying off your mortgage is a smart thing to do, but just make sure you don't fall for one of these traps or tricks or cause any issues for you for your future finance.